Hyundai Motor numbers are out, and just address them for a moment. I think Puneet would be joining us as well. The net profit number, well, I don't know if there were estimates, but the number prima facie, a 20% dip doesn't look all that strong. Revenues though are very, very flattish. So I wonder if margins have come off a little bit. And on a day like this, well, if these numbers would have come yesterday or day before, right, then the stock would have gotten hammered out of shape, I suspect. Today, just that the market mood is a bit more benign, and that is helping. Okay, so I'm told Puneet is here. So first, let's go to Puneet for a quick view on what he makes of these numbers. Puneet, were there estimates, and are these numbers okay, or are they subpar?
Neeraj, it was expected to be a 1% fall in revenues, but the profit number is the most disappointing in terms of, the numbers going forward. So, net profit has come down 20%, as you rightly, 1,124 crores. It was expected to fall by roughly about 6%. So, it's come in much sharper than what expectations were. Expectations were of about roughly 1,328 crores. So, it's come in much below that at 1,124 crores. Revenue was expected to come at roughly, rise by roughly 1%. So actually on revenue also, it's a 800 crore miss. On EBITDA, it was expected, it's coming at roughly about, 1,825 crores. Again, it's a miss there. It was expected to be over 2,100 crores with overall margins expected to be at 12.5% versus roughly 11.2% versus what the company has reported. So it is a miss across all fronts, all these 4 parameters. And I think one of the biggest things is the discounting that has hurt both the gross margins as well as the EBITDA margins, because, brokerages had estimated a fall in revenues, but this is much sharper than expectations. And I think discounting, because of, a lot of competitive pressure in the last quarter, as well as even though the season was very strong in terms of, Diwali as well, but overall the numbers, it's a miss, and that's led by discounting as well. The other aspect was that, volumes were down roughly 5% in this particular quarter on a year-on-year basis, and 3% quarter-on-quarter as well. So the scenario from Q2 hasn't improved, and hence, this is the second quarter the company is reporting results, and it's a miss across all fronts.
Right. Puneet, just curious, one quick follow-on, if Puneet is still around, that is. Puneet, do you believe that competition is the other thing that is really hurting Hyundai? You have Tata Motors, which is doing well in the PV segment. You also have the likes of an M&M introducing good products. You believe that is also beginning to hurt, and is this the start of more pain, or do you believe that this will quickly reverse?
Yes, because definitely competition was very high in this particular time frame, and while Maruti and Tata Motors, the expectation is that they are expected to hold margins. For Hyundai, there was expectation that the margins are going to fall because of competitive pressure, and we did speak about this, that SUVs form roughly 70% of total sales, and we've seen a slowdown once the demand has been met over the last 2 to 3 years. It was very strong between FY21 and 24. This year, the demand has categorically reduced for passenger cars. Inventory also has been maintained at a higher pace as well. But overall, the competitive pressure was there, and Hyundai had to indulge in higher discounts because of that. But one key factor is the Auto Expo. They did, showcase the Creta EV. That's priced roughly about 17.9 lakhs, and that's similar to the Tata Curve, as well as lower to the other BEVs of Mahindra, priced at 26 and 30 lakhs. So definitely, I think that's going to be the next key pivot to watch out for, because it's a very strong product that they launched in the Creta EV. Is expected to see range lower than the peers. So it's going to be a lot of chatter in the conference call basis on that, on higher discounting, as well as what's the Creta EV response. Is expected to launch in February. So most conversations and commentary, I think, will drive the stock price going forward as well. It's going to be a very crucial quarter for all automakers. But for Hyundai, prima facie numbers don't look so good. And I think, the stock price performance is lower than the IPO price of 1,920 as well. So it has to watch out that the commentary is something that's going to be very crucial in this particular quarter.
Okay. Thanks for that. Okay, we'll get to Khushbu and Aditya in moments from now. I believe Cipla, the management is talking post the numbers. If we can, maybe let's just hear a slice of what is it that they are saying in the con call. Let's get across. Okay, we'll just get across moments from now. Okay, while we wait for Cipla to do that, just one quick question, Aditya Shah and Khushbu, I believe both of them are there. I'll start off with you, Aditya, on this, because Hyundai numbers have just come out, and then go to the market-wide call to Kush. the expectation was that this auto burst of numbers that is going to happen, we'll see Maruti do well, because we've seen that both in December and of course the commentary might be good because the first 10 days the sales were good. They've had 2 price hikes as well. So Maruti will do well, maybe Hyundai may not. It's performed worse than expected. For somebody who is maybe holding on to a Hyundai share in the IPO or otherwise, is it a good stock to hold on, or are there better four-wheeler stocks?
Good afternoon, Neeraj. So I think that Hyundai stock from a valuation perspective is not cheap, it is expensive. And the business performance also doesn't bode too well. When you get an IPO the size of Hyundai, of course, the flip side of it is going to be that over a period of time, too many people will end up owning the stock, and if the company does not perform, there's going to be a problem. So my view on the four-wheeler space is Mahindra and Mahindra is doing exceptionally well there. It's an integrated player with a farm equipment business as well as the PV business now turning up sharply with their new launches on the EV side. So that will continue to be my top pick. But today the tale of two stories. On one side, Hyundai is not done too well. On the other side, TVS Motors has done extremely well on their two-wheeler business, and the results continue to be exceptionally strong, leading to a gain of 5%. So in my opinion, within the four-wheeler space, Mahindra and Mahindra looks really very attractive, even the large capex that is going to come in, and the strong farm business that they've really got. Within the two-wheeler space, something like a TVS Motors or an Eicher Motors looks really very interesting. But apart from that, auto ancillaries, where a lot of correction has happened due to the small and mid-cap car niche, is where the real value is, apart from the OEMs. Auto ancillaries like, let's say, for example, Motherson, or somebody like a Sona BLW for that matter, also, they look really very interesting.